Okay, update on Dixie here and hard assets in general. So we'll do a review of some commodities. We'll look at copper, oil, wheat, and agriculture as a whole. So looking at Dixie, I've been saying on Twitter the most important thing is understanding where we are in the 3 year cycle, right? And so we know a new 3 year cycle started in January 2021, right? So this month, May, so this is May 29th, Sunday night, May, and we're closing out May now, so we're obviously about to start June, is month 16, right? And look at the look at the monthly candle that's setting up here. Really telling. So we have a couple more days of price action, so we are trading right now live, and we'll trade again. So we'll trade for a shorter day tomorrow, I'm assuming, and then we'll trade again on Tuesday for the last trading day, last day of price action for this candle. But I mean, just looking at this candle, it's probably going to remain pretty bearish, and it sets up for a pretty easy swing high, right? So basically, once we trade below this low, wherever this low ends up printing for this month, once we trade below that for the next month, we have a monthly swing high, which is the first thing you would need to have a 3 year cycle top, right? Like this one. So this was extreme because this was from the COVID crash, because you went really low and then you went really high. But this is probably a better example. So this was your 3 year cycle high on January 2017, right? And so doesn't this candle look very similar? Just right. So like we made a high and then we failed, and then just came down. So notice that next month was actually bright green, and then the next 5 months were just red, and then 6 really. Then we had like a little bit of a lower high, little retracement, and then the final descent. And so that's important to think about. If we're on month 16, a 3 year cycle is generally 36 months. It's not always going to be 36 months. These things aren't perfect, right? The previous one was exactly 35 months. And so either way, if this is the top on month 16, then we have a lot, like it's call it a multi-quarter decline. And so that's the beauty of it. You don't have to be in any rush. You can catch this trade to the dollar to the downside, which means wind at the back for other trades to the upside, resource trades, for instance, things that work to the inverse of the dollar. And if you look at the weekly cycle, right, this is telling. So week 17 was your swing high. So that was the week of May 9th. We had a swing high once we traded below the low of that week, which was 103.372, right? And so once we went below that low, we had our swing high. So we made that swing high the following week. Then we had bearish follow through the week. So that was last week. And now this week that we're opening right here, Sunday night, as I'm recording, week 20, we're getting bearish follow through it. So are we making a new low? So 101.433. No, we have not made a new low yet. Okay, so we'll see if we sort of hold out. And this line here is a 10 period moving average. So in this case, it's a 10 week moving average. And you can see we did not quite close below it last week, but now we're opening below it here. And so you imagine we're going to just kind of make a move lower here. I am positioned lower here, puts in UUP. But it's now a bigger question of, and this is the point, is this just the beginning of a much bigger decline, right? Because if it is, we'll get more downside, and then we'll get a bounce, right? And so that's where I'll want a position to take profits on this bigger decline once we get stretched, but then reposition to take a short position. So, right, if you imagine, we make a move like something like that, but then we come back up, I want to try to get short up there, right? Like maybe, right, you imagine something like that. Right? So on this move lower, I want to try to get out like maybe here. Once I see, okay, we've printed this low, I better just get out. And once we come here, once this swing high is confirmed, maybe I can get short like down here or something, right? I'm not gonna be able to catch it right here, or I'm not gonna be able to get short here or sell here, right? Maybe I can sell here, right? Or maybe I can short here. Right? Like that's the point, right? Try to find the move and then react after it, as opposed to try to predict it, because you're gonna get burned that way. Although you can use multi-time frame analysis to anticipate. I wouldn't say predict, but I'd say anticipate. And so this is going to be really telling. And finally, the daily, we are on day 43 as we open here, which is today's candle is going to become the Monday candle, basically. We had our top on day 32. So this daily cycle is pretty stretched, which suggests we may get a daily cycle low soon, right? So a bounce. But if this is an ICL decline, and we're just on week 20 this week, maybe that bounce leads to a lower high. So we get a early daily cycle high, right? So like maybe something on like day 7, 10, 12, right? And then we continue the weekly cycle decline. Because the last weekly cycle was 33 weeks. And the one before that was 20. The one before that was 19, 26. So here at week 20, maybe we're setting up for like a week 25 ICL. But again, most importantly, we want to see how that candle opens on, I guess it would be Wednesday for June, and how that sort of progresses. Do we actually print this monthly swing high? That's going to be really telling. So we'll move over the copper here as our first example of sort of a resource trade. And copper appears to be on week 3 of a new weekly cycle, having made a weekly cycle low on May 9th. So a lot of these things are following a similar kind of path to like the silver, uranium, in that kind of area. They're not, right? And so that's interesting, right? The price action is very similar, even if the counts aren't the same, right? Because silver is week 15, uranium's week 15. In this case, copper is week 21. But same idea, right? Printing a swing low around that same week. And now this is week 3. Again, this isn't great follow through. And obviously this week just opened, so I'll give it some leeway. This week, last week wasn't amazing, but give it some time. And this candle is certainly setting up for a monthly swing low, excuse me. So, a trade above this high right here, right? We get a trade above that 446 area next week, let's say, right? In June, that gives us a monthly swing low here. And on the monthly level, right, it would appear that, well, that's interesting, right? Because it would appear that we had our low on month 17 for the yearly cycle, and then we had topped out on month 7, and so this would put us on month 9. So we'll have to watch this, because we may be in yearly cycle decline here. I mean, this could certainly resolve as a very bullish a bull flag, really. But there are clues that we may be in a yearly cycle decline. I'm going to definitely take a closer look at that. That's interesting. And I want to look at oil, and I'll post this in the comments. It definitely looked like oil was going to make a move to 75, right, by the summer. It does not look like that's the case anymore, right? It looks like that interpretation was wrong. That is not the case. This recent price action is suggesting we're, threatening to make a run back to new highs, right? And so if I zoom into, let's say, the 3-month chart, all right, take this log off. Right, so you can see we still have this wick. This is our quarterly chart. This is our current quarterly candle. So June will be the last month of this candle. This looks like it's making its move back to all-time highs. This looks incredibly bullish. And if we zoom in and we look at, let's say, like the weekly chart, looks like we had our a weekly cycle low on week 19. And that's the thing about oil, and that it's really squirrely with its cycles. And so we're now already on week 7, and this is, new week starting today, starting, May 29th. And so we're already making a new weekly high. And so we're already, not late in the weekly cycle, but I mean, week 7, right? It's not early. You certainly can't say it's early in the weekly cycle. And we're well above the 10 period moving average. I mean, if you were watching this more closely, you could certainly make a case for being bullish earlier, for sure. But this looks like it's making another run to new highs. And I have to imagine that's going to have some spillover effects in many markets. Like markets are going to get spooked. I'll turn to FCX really quickly, correlated to copper, as we were right there. And so copper and FCX looks like it printed a weekly cycle low on that same week that copper did. But in the case of FCX, that was week 33. Again, same idea, different counts, same exact price action though, same kind of reaction. In this case, a little bit weaker, but we did get good bullish follow through last week. And so the candle that opens on Tuesday, right, when the stock market opens in America, in the U.S., will be week 3, and we'll see. It looks like it's setting up for bullish follow through. The 10-week moving average is up here at 43.42. So that's a nice little bit of upside. We're here below 40. That's 3 points already on a $40 stock. Not bad. 7.5%. And so it does look like, we're, in that case, we'd be relatively, early in the weekly cycle. And if you look at the daily, that will put us on day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So we're going to open on day 12. So not super early in the daily cycle, but you imagine we should get to that. That's your level on that weekly, right? Where you would imagine you'd expect some resistance, these huge down candles. But this is actually looking pretty good. And if, on the monthly level, you can see we'll have one more day of price action on Tuesday. I suspect we're able to get back to green on the month. That just means we just have to trade. We just have to close above 39.94, right? That's where we open. So we have to get above there. So close in the $40 range, right? And we'll have a green month, and more importantly, set up for a monthly swing low. And that's the trend in general for the broader market. You want to watch for that monthly swing low in June. That doesn't mean we're completely out of the woods if that happens, right? We can always fail. And if we do start to fail, that's when you catch a spectacular short. But that's your first, that's going to be an important signal. See how we react to that level, to understand, right? That might be the level to short right there, right? Otherwise, maybe, a signal for more upside, if only in the short term. So we looked at oil, we looked at copper. Let's take a look at wheat. So this is an ETF that tracks wheat. It's just ticker symbol WEAT. Very cute. This looks precarious here. This is the weekly. I mean, very steep ascent. We have this huge weekly candle. We've really just been consolidating here. I wouldn't really want to touch this. I mean, there are better plays kind of in the space. That's your wow. I mean, it's important to note, yeah, right. The all-time high is at $26 and we're at 12. We're obviously on a path to getting back there. But let's see, is DBA a better play? Okay, that's interesting. Wow, look at DBA. Look at that rebound. This is a quarterly chart. So each of these candles is a 1 quarter. Wow. Look at that rebound. So 1, 2, 3, 4, 5, 6, 7, 8 straight green candles in a row, or 8 straight green quarters in a row. So 2 years of straight green quarterly candles. But after this massive decline, I mean, let's put that into perspective, right? How, like, what was the decline? Yowza, right? So we declined 70%. And how much time, right? Because that's important, right? the decline in terms of time can be is important. So over the course of 49 quarters, yikes, it declined 70%. That's painful. It did make this nice little ascent, like, well, 75% in like 5 or 6 quarters. But we've now, what was our move off the bottom? Let's see. That's important, right? So we've now made a move of 75% off the bottom, which that's so interesting. That's just about the same as this, right? Or very similar at least, right? Let's take the auto off. So yeah, this is 80%, and then we collapsed, and now we just made a move of 75%. Well, that's interesting. I mean, this is definitely coming up on the 3 year, the sort of 3 year cycle high, or where you might expect it to be for commodities, which is interesting. Which is the same place, right? Like that same 3 year cycle high for the dollar that we just talked about. And so that's DBA. Very interesting. So important, that 3 year cycle high, any further signal that the dollar is truly topping. And let's look at a quarterly candle for that bad boy. So the quarterly candle hasn't gone green or red yet. That would need to go below 98.33, right? And we're right now at 108.1. So that would be a pretty big decline in terms of the dollar, about 3% down from here. But that would have to happen if we were making if we were in the process of the 3 year cycle decline. So we'll have to watch, right? We'll watch for those in like those near term steps on the lower time frames first.